right, let's put the spotlight then on BHEL. The stock trading close to its 52-week high. It's been certainly in the spotlight of late as it's shot up in the last 1 month and in the last 6 months as well. Dr. Nalin Shinghal is the chairman and managing director, and he now joins in on the show to talk about the long-term growth prospects for the company. Thank you so much for taking time out and being with us. Dr. Shinghal, to begin with, let's just talk about the order inflow because that has been robust in Q2. We've seen a revival as well of the thermal order pipeline. What is your outlook in terms of your order book targets, and which are some of the major orders as well that the company has recently bagged? If you could just walk us through that.
So the most recent one of the most recent and the big order has been the Talcher thermal power plant, and that of course has just come 2 months ago. But on the thermal side, as you said, we are looking at revival of ordering, and we are expecting a substantial number of power plants to be out on bid in the next 2 years. In addition to that, of course, on the railway side, the bid has just gone in for the Vande Bharat 200 trains. That's another major one that we are very aggressively going for. And nuclear, again, is another area we are working on.
Okay, fair enough. So clearly we are seeing a pickup across the board, and you'd also said in your call, the conference call, that the ordering for thermal-based power plant is showing a revival, and this is after a gap of 4 years. Tell us a little bit more about the visible tenders. Is it close to 4.5 gigawatts for the next year? And can you just walk us through the number as well? Your order book is at about 1.6 lakh crores. Where do you see it headed?
The current order book is about 1 lakh crores, but I wouldn't put a specific figure there. But you see, on as you said, on thermal, we are looking at almost 4 to 5 gigawatt of ordering per annum for the next 3 to 4 years. That's a major thing which we expect to go on for the next 2, 3 years, 4 years, and so that is of course has been our forte. So that besides that, nuclear, we had got last year, we got a big one, the 12,000 crore, this bulk tender, that fleet mode tender. And we are expecting, given the need for the net zero nuclear, we are expecting growth in that. So that's another area that we're working on majorly.
So much to talk about with you, Mr. Shinghal. But, first things first, high raw material costs as well, we understand, are impacting margins across the industry, not just for you. Having said that, you seem a little bit protected because your new Talcher order seems to be very, aggressively secured, relatively so. But wanted to understand, what's the margin visibility? Can we expect improvement? How do you plan to protect margins going forward with cost pressures still high?
Look, there has been a very major thrust on cost optimization. We have a dedicated team looking at design, procurement, manufacturing, the complete lot. And that is why, despite the sort of increases we have seen in the steel prices, copper prices, cement, or across the board increases we have seen, despite that, I think our increases have been moderate. If you look at what has happened in the market, CRG, the way they have all shot up. So going forward in the current year, next year, I think pressure will continue. But as you see, these are all long cycle orders that we get. So typically the major turnovers start happening in the second, third, fourth years. So as they start kicking in, those pressures should ease out. Of course, we have to be competitive. In today's market, everything has to be very competitive. There can be no doubt on that.
Mr. Shinghal, that I wanted to talk about was Capex revival seems to be the theme. You talk to any investor, you talk to any market watcher or economy watcher, they're all talking about Capex revival. Considering you have a bird's eye view in that sense, and I wanted to ask you, what prospects do you see when it comes to defense as a segment, when it comes to railways and trains, coal gasification? What's your own view on where this Capex revival theme is likely to head, say, in the next 2 to 3 years?
So thank you for that. I think you've touched on all the key areas that we are looking at. So if we go one by one, defense, we are aware, how much there is focus on Make in India. So we have been, we've been supplying the main guns to the naval ships, and which are called SRGMs, super rapid gun mounts. We have started now the process of the order that started coming for the upgraded SRGMs, which have a better range, better performance. So then we are looking at a number of other defense developments, especially in the Ukraine scenario. There have been a lot of things which have happened on the defense side. So we are looking to meet the immediate requirements also, developmental requirements also. So a lot of work there on the defense side. Railways again. We as I just said, we are aggressively participating in the ongoing the expansion projects. So Vande Bharat, there's one tender which has just been the bids have just gone in for 200 trains. There's another one coming up for 100. There's a third one coming up for another 100. So we are looking to be because railways, we have played a major role in the past, and this is an area which is we see a lot of capex happening there going ahead, even on the loco side. So in fact, in the tender which has just gone in there, we are ours the only homegrown indigenous sort of bidder. So from a Make in India and Atmanirbharta perspective, we are very, very bullish on that. This will be a major area. This capex, from a capex perspective, there's a very ambitious modernization upgradation plan happening there. Coal gasification is another area where it's quite clear that India having only we don't have gas, we don't have oil, we have only coal. And we have high ash coal largely, almost 70 to 80% of our coal is high ash coals. So what going forward, that coal will get utilized, but then that will have to be in sync with the requirements, sustainability requirements, environmental requirements, net zero requirements. So that is why the focus on coal gasification, where the Prime Minister announced 100 million tons per annum sort of a target by the year 2030. And there again, we have the only indigenously developed technology for gasification of high ash coal. It's a proven technology. And we have recently signed up MOUs with Coal India and Naval Lignite for working in that area. Our teams are moving ahead very rapidly, completing the commercial design, commercialized and scale up designs, engineering, all that is working fast. So that we expect very major capex happening in that area also. And of course, thermal we've already spoken out. So those are the major areas, and we are bullish on these areas.
Good morning, Mr. Shinghal. So just picking up on that, you just said that you are the only indigenous firm to have bid for this massive Vande Bharat tender, more than 50,000 crores. I think nearly 23,000 crores has to be paid upfront. You formed a joint venture with Titagarh Wagons for this. The question I also want to ask you is that this relationship with Titagarh, is it only for this tender of Vande Bharat trains, or can we expect more? And for this tender, are there any specific extra qualification points for being homegrown? This is a government that is talking a lot about being Atmanirbhar.
So Titagarh, this is our first initiative with them. So let's as it works forward, I'm sure there will be other opportunities coming up. There is no separate points for homegrown, but I think during I think we should be given the one being the fact that we are fully homegrown. I think that should be something we should capitalize on.
Mr. Shinghal, the other question I wanted to ask you, and in November, it was reflected in the stock price as well when the markets were disappointed with the quarterly performance of BHEL. We had seen some brokerage firms also come out and highlight that and talk about the future of the stock price. But Mr. Shinghal, talk to these analysts, talk to the retail investors. The last quarter, can we say the worst is behind and things are only going to look better? Because the fact is your commentary that has come in from the outlook does indicate many shiny spots.
So you see, as I said, the pressures will continue as we play out with the old orders. We're trying to, keep the costs down. We're trying to push up the execution. And they should then sort of wind down as we come into the execution of the new orders. So I wouldn't go out to say that no, this is the I wouldn't be able to really give any guidance on that side.
Mr. Shinghal, given that the cabinet has given the nod to National Land Monetization Corp for monetization of surplus land with PSUs, I wanted to understand whether anything material has happened on ground, whether there is any plan to monetize land that BHEL owns.
So we are waiting for the land monetization corporation to kick in, and let's understand we are preparing for that. So I'll say that comes in, we'll have something to offer for that.
Give us numbers on the land parcel that you're sitting on, and I'm sure you've done some back of the envelope calculation on the valuation of the land parcels.
No, look, you see, the point is, no, it's not in that sense. You got it wrong. Actually, you see, if you look at land we are sitting on, we're sitting on 16,000 acres of land, but that is not monetizable land because that is on right to use basis. There are bits and pieces separately which is directly owned buildings, commercial properties, other property which are owned, which we would look to monetize. That's the sort of thing we can be looking at. That bulk land cannot sort of give us revenue directly to get revenue directly to.
Sure, it runs into many thousand square feet, though. I'm not talking about the bulk land. I'm talking about what can be monetized.
Yeah, so that there are substantial properties there which we are identifying, commercial properties which we have, which can be better utilized. We have that process is on.
Okay, fair enough. Given that we did touch upon your overall margins, it has been supported as well by the correction that we've seen in commodity prices. But then there is that bit of a worry of a delay in ordering activity, a further increase in raw material prices that could impact your operational performance. Given that margins have come in subs 30% this time around, what is your outlook in terms of where you see your margins headed?
I'm sorry, I wouldn't be able to give you any figures. I've already given you, I've told you what qualitatively what we are looking at.
But are you worried about a further rise in raw material prices hurting margins?
Yes, that would certainly be a very, very key worry.
Right. Now, I wanted to understand a little bit more then, Mr. Shinghal, what your commitments are in terms of, going green, making, looking at, your carbon footprint as well. Are there any audits that are being undertaken on campuses, facilities in order to ensure that there will be low energy utilization?
Yes, we are looking at improvement of efficiency, energy utilizations across the company. That's a process which is
All right, fair enough. Good to have you on board. Thank you so much for taking time out, joining us exclusively on ET Now and giving us an outlook on your order activity, the land parcel, as well as the overall Capex within the sector. Pleasure interacting with you.
Thank you. Thank you.
That's the word coming in from the management of BHEL. They are seeing the bidding for the Vande Bharat train order, where they say they're very bullish and optimistic. Cost optimization is going to counter the rise in steel prices. Order book looks healthy at about 1.6 lakh crores. And they are seeing other opportunities as well down the line, perhaps with Titagarh Wagons, as they are bidding jointly with them for the Vande Bharat trains.